He's forgotten more than I will know in many different ways. And more importantly, Dalen and I like to read the same books. So that's the key thing. We met because my wife had picked up a number of second copies of business books that he had put available, or his wife had put available. And so I came home and found this collection, this box of books that my wife said, "Yeah, I picked this up." And I said, "Whoever you got this from, I need to meet this guy." And that's how we met, was through a mutual love of the same authors.
That's
Yep.
awesome. I think we'll get started. And I'll let everybody know about something in a second here, but we're going to get started. And then anybody arriving late, that's okay, they're late. At NATE, we honor and acknowledge that the land on which we learn, work, and live is Treaty 6 territory. This place is a traditional homeland for the First Nations and Métis peoples, and today we are all part of this treaty land. The traditional name for this place is Amisquachi-Waskigan, which is also called the City of Edmonton. Welcome, everybody. Thanks for joining us. Today, we're very fortunate to have Craig Sherburne leading us through getting investor ready. Craig is a corporate commercial lawyer and patent agent registered in the US and Canada, and has spent the past decade working in startup ventures. With his experience in venture capital investment banking, combined with acting for many early stage entrepreneurial startups, he has been able to assist his clients through their full business life cycle, from initial incorporation and business strategy through intellectual property generation and management, and to the eventual sale. So he is also one of our valuable mentors for our students in our Entrepreneurship Blue Book program. So I'm going to pass it over to you, Craig, and I'm going to mute my mic. And if everybody else could mute their mics throughout, that would be great. Use the chat for questions, and afterwards we'll open it up for questions.
Very good. I will apologize if I'm not looking at the camera, because I'm looking at one of the many screens that we all find ourselves surrounded with now. One of the things that's not in my bio is that I am actively collecting letters to put after my name. And so part of that, what you're going to get today is some of my thoughts that have been shaped by my recent experience of completing my MBA. So I might apologize in advance for talking like an MBA at a few points. I will try to limit that, because I think I took my MBA out of spite to be able to challenge some of the MBA speak that I kept on hearing, only to leave my MBA talking like one too. So be aware, I'm part of the Stepford MBAs perhaps. So I'm talking today about getting investor ready. This is something that's popped up quite often in both my practice, and I have a number of business interests as well. And so starting up new businesses on my own, when I talk to my fellow startup partners, one of the things that I keep pounding on is starting from day one to be investor ready. Now let's see, here we go. So the purchase of a sale, the purchase and sale of a business is exactly the same as getting investment into the business. There is no difference essentially between somebody buying a business and somebody buying into your business. One of the differences that do exist, though, is who's likely to be doing this. Many times your initial financing or investment for a business comes from your friends and family. And friends and family treat investing in the business very different than somebody who's at arm's length or a stranger. So what can happen is that it can be quite a shock for entrepreneurs when they first interact with their first arm's length investors. They're surprised by some of the questions they receive. Many of these questions are the first time they've ever gotten these questions. Such shockers can be received as, what assets does your business have? Or what assets do you need to operate your business? Or even just, who are your customers? These are questions that sometimes entrepreneurs just aren't ready for, because they've been living their business every day. They're not ready to answer the question to a third party of what is your business? Now, what is a business? This is where the MBA hat comes in. The MBAs would describe a business as anything that transforms the inputs or products, time or services into an output that third parties are willing to pay for. That's fine and dandy, but I'm going to come to the position that just because it's profitable doesn't mean it's a business. And to follow through with the next statement, I need to describe the following. In 2013, there was this show called Mythbusters. Mythbusters was hugely popular, perhaps for people who are younger than I, they may not have watched it. But in Mythbusters, there was this gentleman by the name of Adam Savage. And one of his most brilliant quotes was to say, the only difference between science and screwing around is writing it down. And I heard that, and the next day, by complete coincidence, I came up with my current bit of wisdom, which is the only difference between a hobby that makes money and a business is policies, processes, and procedures. Trust me, there are plenty of hobbies that make money out there. And based on my experience over the last 20 years, I can say that many small enterprises, um, uh, what do I mean by that? An enterprise is some activity that has less than 50 employees. There are many small enterprises out there that are making their participants lots of money, even millions of dollars at times, but they're still just hobbies that make money. Because there comes a point for every business where the hobby that makes money needs to change into a business. And just because you're profitable doesn't mean it's a business. And more importantly, you can sell a business, but it is really hard to sell a hobby that just makes money. And to use as an example for that, I'm going to tell you one of my famous stories. So let's ask the question, why can't you sell a hobby that makes business? Or I'm sorry, a hobby that makes money. And I'm not going to say that you can't sell a hobby that makes money. I'm going to say that your pricing drastically decreases if you're not selling a business and only selling the hobby that makes money. And let's use an example. Let's pretend that you have woken up one day and discovered a new superpower. You can sense truffles from 100 meters away. You can beat the world's greatest truffle pigs hands down quite easily. And you turn a side hustle of sniffing out and finding truffles into a very profitable business, supplying the greater Edmonton region with very expensive and some of the finest truffles ever found in Canada. And you create Bob's Truffles. Now you're making $150,000 a year, and you've decided that you want to sell your truffle supply business and you want to retire to a nice warm beach. But how do you price your business? What are you going to sell it for? Well, how much is a business worth? There are 4 ways that you can value businesses or value any asset for that matter. And I'm presenting them here. So the first way you can try to value an asset is, what are the cost of the inputs? The second way is, what are the component values for the buyer and the seller? The third is, what's the fair market value that a third party would pay for your asset? And the fourth and final one is, what is the value the purchaser ascribes to the asset? And this one's really funky and it really can vary. Property that carries sentimental or emotional value is going to have a big difference between buyer to buyer. Spider-Man #1 is going to mean something very different to me and the price I would be willing to pay versus what my wife would pay. But it also can change based upon the surrounding circumstances of the sale. And we'll get into that a little bit later. With a business where you don't have these sentimental or emotional elements, your value to the purchaser is usually based on a multiple of the profits that they can expect to receive. And that multiple of profit can range, and I've seen it range everywhere from 0.3 times the average annual profits of the business to all the way up to 9 times. And it's usually tied to the expectation that the purchaser will have to receive those profits on a year-by-year basis. So construction industry, where there is very little carryover from one construction job to another, you're essentially only as good as whatever current work you have in your business hopper, if you will. Those can range from 0.3 to 0.9 times the average profits the business has received in the past. Commercial cleaning industry, on the other hand, where you've got these long contracts with very little turnover in commercial cleaning contracts, those can range from 3 to 7 times the profits before. So these are our 4 ways that we can value an asset. Now, before we talk about our truffle business, let's use just an example. Let's use an example of a freshly made submarine sandwich. It took you 5 minutes to make. You paid, it took someone 5 minutes to make, and you paid that someone $24. It takes $3.75 of bread and cheese. So the inputs clearly cost $3.75 in materials with another $2 in employee time. So your input pricing is $5.75 for the sub. Your component value to you is what it took for your input cost. So it's $5.75. The component value to the purchaser, though, is what it would cost him to make the sandwich, which is $3.75 in bread and cheese. But his time he allocates for free because he's going to make it himself. So his price is only $3.75. Your fair market value price is what's it cost for a sub around in the area. That's, let's assume, between $6.95 to $8.95. And then the ascribed value is very condition dependent, because that's the value that the purchaser, value of that product to the purchaser, and it can be very dependent on the circumstances. For example, if you are selling a sub at the stadium where there are limited options for food, well, and they are hungry, they couldn't bring their own food in because they were patted down for it, suddenly the value to the purchaser goes up. And this can explain why you see $10 hot dogs at stadium and sporting events. In general, there's the following pricing rules. As the seller, we always want to sell at the highest price. The purchaser always wants to purchase at the lowest price, and the sale price is always going to be the lowest price the seller will accept and the highest price the purchaser will give. So in order to get to the answer of getting ready for investors, we've now stepped through the Bob's Truffle. We've bounced into a hot dog, and we're going to now come back to our truffle business, because this is going to be the example of why hobbies that make money are so hard to sell. So you've got this hobby, you are going to retire to a beach. What's your input costs? Well, your input costs were your time only as you sniffed out truffles. So your input costs are zero, and since you're going to be retired and sitting on a beach, there is no time cost anymore in this business, so the input value is zero. The value to the seller is the input costs, which are zero, and the value to the purchaser is the value of the truffles the business will produce. And since your sole truffle finder will be on a beach in Mexico, the value to the purchaser is zero. So we got a value pricing of zero. Current market pricing for zero truffles is, might have to use a calculator on this, it turns out it's zero. So we've got a fair market value pricing of zero. And now let's estimate the value to a purchaser of no truffles. And that one's going to be a big zero again. So here we got the value of Bob's Truffles, which was making $150,000 a year, which is certainly nothing to laugh at. And that's $150,000 profit, by the way. Its value to a third-party purchaser is zero. It's not a business. It's a hobby that makes money. The business value increases with transferability. The more that you can transfer your know-how, your customers, your suppliers, your operations to a third party is the more that you're going to be able to get for your business. Every business starts with an entrepreneur with an idea who goes forward and tries things, and every business therefore kind of lives in the head of every entrepreneur. Your goal as an entrepreneur to turn it from a hobby that makes business into a business is to get it. Your goal as an entrepreneur from turning it from a hobby that makes money into a business, is getting it out of your head and onto paper. And why is this relevant to today's topic? Because we're talking about getting investment ready, not about selling your business. Well, investment is somebody buying into your business, not buying your business. If you're going to exchange a piece of your enterprise in exchange for an investment, you need to know how much your enterprise is worth. And in order to determine how much you're going to give up for somebody to get a piece of your enterprise. So this is one and the same. Thinking of increasing the value of your business for sale is the same way as increasing the value of your business for receiving an investment into it. So getting investment ready is all about the paperwork. There is a way too common story that I get in my office. An entrepreneur comes in, they're meeting with some success. They've got themselves a market, they've got customers, notoriety, they've got a great product or service. And either they're out there looking for somebody to invest in their business, or just by a happy coincidence, somebody comes up and says, "Hey, I really want to invest. I want to work with you and give you some money so that we can both make some more money." And remember that investment isn't always just somebody coming in and saying, "I'd like to buy a piece of your enterprise." This can be bank financing, credit lines of credit for the bank. They're going to be asking very similar things. Private lending, joint ventures where somebody with a similar business or in the same area comes and says, "Hey, let's all work together." These are all examples of people investing in your business in one way or another. And they're going to be asking the questions, what is your business? This also might come from market expansion into different geographic locations. You have a very thriving collection of hot dog stands in Edmonton. Somebody says, "I'd like to take your business and I'd like to open similar in Calgary, and I'll give you some percentage of what I make." That's essentially somebody investing in your business. Even credit lines with some of your major suppliers. It is quite common for your suppliers to offer up credit lines or credit opportunities with them. They will be asking questions as if they're investing in your business, and you need to be able to answer it. All these investors tend to have the same thing. They'll ask a question or they'll say something along the lines of, "Hey, when can I get your access to your data room?" And it is quite common for an entrepreneur, no matter how long they've been running their business, to go, "A what room now? A data room? Well, I don't have a data room. I have a living room and a bathroom, but I don't have a data room." And that's where I'm hoping to try to raise that to your attention now, because we can start early to address this problem before it happens. So data rooms are sometimes known as diligence rooms, or in the digital world today, a diligence folder located on a Dropbox or a Google Drive. This is the one-stop for anybody who wants to understand what your business is. It's going to provide them an understanding of your financial position, what your assets are. It's going to describe and allow somebody to figure out what your business is, and most importantly, what your operations are, that you've got documented and documentation that they could understand and carry forward with your business just by looking at the pieces of paper that you've got scanned or otherwise sitting in a diligence room somewhere. Now, preparing a data room after you've been running for a long time is a massive undertaking. I just did one for a client in the United States that had been operating for about 2 years, and it was a 6-week process of anywhere between 3 to 5 hours a day for up to 3 people to be able to put it together. Why is it such a massive undertaking if you've been operating for a while? Well, think about how hard it would be to sit down and write out everything you have done for the last week. Now, multiply that by 1 to 3 years, where you're trying to document everything that a business has been doing for the last 1 to 3 years. Every invoice, every deal with a supplier that you've done, every input of inventory and tracking your inventory. This is massively difficult to be able to piece it together after a period of time. But it is really easy if you just do this while you're running your business. So what's a data room look like? Remembering that the data room is all about capturing, for somebody to understand exactly what your business is and your financial position, it really has 4 or 5 different components. You've got access to your minute book. You've got a section for your business operations. You've got a section that describes your assets. Maybe you've got a section that describes your IP agreements, if there's any relevant intellectual property. You have a section that describes your financial state, and then you might have some market-specific matters. So, for example, if you were doing software as a service, you might very well have a section that contains all license agreements or open source code that you have. If you were in the healthcare area, you might very well, we're working as a biotech, I should say, you might have a section that describes all your clinical operations, separate and distinct from your business operations. So let's start with a minute book. A minute book is only for a company. If you don't have a company, you're not supposed to have a minute book, so relax. But if you do have a corporation and you have incorporated for some reason, and we've given talks here at the Mauji about answering the question, should you incorporate? I'll leave that question up in the air, but simply say if you have incorporated, you must have a minute book. And most importantly, you've got 3 key addresses that you're giving to the government every year for the world to see. You've got a records address, you've got a registered office address, and then you've got this agent for service address. A records office is where your minute book is kept. A registered office is where you can be served legal documents. If you need to be served legal documents, for example, if somebody needed to sue you, they would leave it at your registered office if they were suing the corporation at least. And then an agent for service is just one other way that you can be served legal documents. Instead of them leaving it at the registered office, they can leave it with one individual or a human being instead. If you have created a corporation, you must by law have certain documents which are generally included, and we refer to those documents as being the minute book. It must by law be created, and it must by law be kept at the records office. This is even if you have one shareholder. And frankly, you need to understand that if you have a corporation, anybody can show up at the records office and demand certain documents. And if you don't provide those documents, then there are fines that can be levied against you by law, either in the Alberta or the Canadian Business Corporations Act. A lot of people get led astray. They go to a registry office, they receive 7 pieces of paper at the registry office, and they say, they walk out and they go, well, I'm a company now. And I've had people operating for 10 or 15 years that have never done a single thing other than every year sending in their payment to the government of Alberta as part of their annual returns. But they still have not actually ever created a minute book, and that's a real problem, particularly if you're getting somebody who wants to invest in you, because their first question of themselves or their legal counsel are going to be, let's see your minute book. Why? Well, because the minute book tells the kind of corporate law story of your company. It says when it was created and kind of demonstrates the continued legal existence of the company. All the key decisions that were made by the directors of a company should be documented in the minute book. What are the key decisions? Well, I can assure you that where you buy your boxes is not a key decision for the creation and continued legal existence of the company. But where you opened your bank account, that should be documented in your minute book. Who the directors are, that's a key decision. That should be in your minute book. Who the shareholders are and how that they actually had the right to acquire shares and how many shares they got. That's supposed to be in your minute book because that's a key decision. There are kind of general standards on what goes into a minute book and what doesn't. And I would simply say, look to your accounting or legal professionals in your life for guidance. They're going to be able to help you know what goes in the minute book and what doesn't. And they're going to help tell you you need to have that minute book. Don't get me wrong. Nobody has ever invested in a company on the basis of what's in their minute book. That's not what they care about. But there are plenty of people who have not invested in a company because of what their minute book says or doesn't say. So this is one of the examples that I refer to as not giving a reason to say no to your investors. Represent yourself appropriately, and when they say, "Can I see your minute book?" you can say, "Oh yeah, let me just look into that. Oh, I'll make a phone call." And the last thing you want to do is to be trying to not only build out your data room, but also recreating a minute book in accordance with law, all so that you can bring an investor in to take a look at these things. Get this addressed ahead of time. Do not mistake me as saying you have to rush down to a massive major law firm to get this done. It can be done much simpler, and you can take care of this yourself. Most registry offices, when you register, if you turn around, you will find a turnstile that will have various kits available. Your own legal will kit is common. Build your own living power of attorney or enduring power of attorney kit, and they will usually be a make your own minute book kit. Great way to look at it, and it will step you through all the documents that you were supposed to have. For example, even having a share certificate to document the fact that you have a shareholder. That will be in the minute book kit. Buy it. But don't just buy it. Buy it, look through it, and then more importantly, follow the directions every year on what you're supposed to be doing. There's some great online incorporation services that are out there. They generate all the documents that you're supposed to have in the minute book for you. They instruct you to print them out and to keep them available. They will even maintain your share registry for you, but they won't provide you those records and registered addresses. That can be important for some people who may not want their home address known to the world. And it is publicly available now when you incorporate what your registered records and agent for service address are. So keep that in mind. I would also give a little counsel on these online incorporation services. They will do it for some of them for very, very low fees. So I think I had one client who came in and he had incorporated online for something like $600, which is exceedingly low for all the government fees associated with it and all the documents that are prepared. But then he needed to, instead of having some shares owned by his mother wanted to give the shares back to him. And so to be able to use the online service for doing a share transfer, he had to upgrade his subscription level in some way to the point where it was going to be nearly $800 to $1,000 for him to just transfer the shares from his mother to himself in accordance with the online service. So there is this kind of general rule that you probably are going to end up paying the same one way or the other. Sometimes you pay up front, sometimes you pay at the end. Just be aware of what those extra costs can be when you go online to save yourself some money otherwise. The best way, in my opinion, not just because I'm a lawyer, is but deal with a lawyer or accountant to do it. Accountants, I don't know why it is, but accountants love to play lawyer. I don't know any lawyer who loves to play accountant, but the accounting firms and many accountants will prepare your minute books for you. And more importantly, they will maintain and keep your minute books for you. I can't overstate the value of having some professional office receiving documents on your behalf, or more importantly, receiving people who show up and say, I'd like to see your shareholder and director list and register, please, instead of them showing up at your home. It happens rarely, don't get me wrong, but it happens often enough in my life as a lawyer where I will send a process server to an apartment somewhere in Calgary and say, I demand to see a list of your directors immediately. Maybe they would have preferred to have that happen at their accountant's office instead of their home. So that's your minute books. What does the section for your business operations look like? And this is a massive list. I can't tell you what should go in your data room that you are preparing from day one of your operation, because I don't know your business. You may not know your business either. But if you look through this list, you're going to see this common theme that what you're putting inside your data room is kind of everything that you would need if you disappeared off the earth for somebody to come in and run your business for you. It's going to have your business license. City of Edmonton and most municipalities require any business within their area of influence to have a license. It is unabashedly purely a taxation effort by the municipalities. You get nothing for the business license other than the fact that you are operating in accordance with municipal law. But the fact is that if you're getting an investor in, the investor is going to want to make sure that you're operating legally. And so having a copy of your business license in a directory somewhere is a great assistance. Any loan agreements that you have with money coming in or out from your business, that should be in there. If you've got commercial software, and this used to be more of an issue 12 years ago than it is now, but it's still an issue. When somebody's investing in your business, they want to know that you've got legal copies of Microsoft Word or Simply Accounting or whatever it is that you're using in your business to operate it. They want to make sure that you are actually legally entitled to use it. So that should be in there. Supply agreements. Now, this is one that I find is a real trick for many of my clients. They go, I have no supply agreements. And I go, well, do you have suppliers? And they said, yeah, but we don't have agreements. And then I say, show me a purchase order. and they show me a purchase order. And yes, on the purchase order, on the front of the page, on the front of the page, it has, you will buy 100 widgets at $10 a piece. But on the back of the agreement are all the terms and conditions associated with that purchase order. That is a supply agreement. You want to put all of your purchase orders, everything, every supply agreement that you've got, put it in a directory. Again, not really hard. It is one extra step when you actually are getting the purchase order, just dumping it into a directory that you have set up. It can be a real royal pain to do that 3 years after the fact. So keep that in mind. Employment agreements. They may not be employment agreements per se. It might be an employment letter. That seems to be a popular way for people to do it. Or even an email that says, congratulations, you're hired. Put that in there. Dump it into a directory. Same with your consulting agreements. Either if your company's acting as a consultant or you're receiving consulting services, put those in the directories. Service agreements might, if you've got people who regularly come through and you had, for example, a food preparation business, and you had hired people to come through and clean your equipment on a regular basis, then put that in there. This is the kind of thing that somebody who was running your business needs to see. There's some peculiar, maybe specific to your business, type of business there, SSL certificates. Those are the certificates that provide the ability for you to have an HTTPS address and do secure transactions online. If you've got online sales, you've probably got an SSL certificate. You may not know it, but you've got it. You should try to track down the copy of it. And why I say you may not know it is that you might be using an online service that provides it for you, or more importantly, the guy who developed your web page went out and got it for you, but never gave it to you. Ask for it, because this falls into the kind of general area of business accounts, logins, and passwords. You want to have a central location for all the passwords for accessing all the very important online services for your business. You do not have to put them unencrypted in a directory, but they should be located somewhere. For example, a password manager. Get yourself I can't speak highly enough about password managers in today's day and age, but they are a really good way of maintaining all the logins and passwords for your business, separate and distinct from all your logins and passwords. If you are going to sell your business tomorrow, the last thing you want to do is to give the purchaser of the business the same password that's going to give him access to your personal bank accounts and your Netflix. Because I can guarantee you that Netflix, you're going to be suddenly booted off because your purchaser is now using your Netflix as part of the purchase price. So don't undervalue the benefit of having separate, distinct, unique passwords and keeping those separate and distinct. Company policies, procedures, and operations manual. This is one line in here, but this is massive. If you've got a good business, if you've got a successful business, write down what it is that you're doing to be successful. At the very least, it's going to help you when you hire new staff, because you can just take portions of it off to go, here you go, new staff member. This is how we make the bread. This is how we order the widget. This is how we receive an order from a client. And then when you write that down and give it to them, not only does it make it easier for you to be able to train them, but it also writes down the policies, procedures, and processes that you're following that are kind of what makes a business. This is where your value comes. Any licensing and certifications, always a little bit surprising of what you need to be licensed to do in Alberta. For example, you would think selling a car. Right? I'm going to buy cars and I'm going to sell them. No, you need a license to do that in Alberta. Oh, I'm going to braid people's hair. No, you need a license to do that in Alberta. So always be aware that if you are licensed and your business is properly licensed, put it in there. You want to go from door to door and offer to build fences for people, and you want to take a deposit from them for some small amount towards the purchase of the product that you're going to, the fence that you're going to build, you need a license for that. So be aware just in general in your business what you need licenses for. And if you've got the licenses, put this in your data room. Next, assets. This is one that everybody underestimates and never really realizes what they are. You want a directory that contains a list of everything your company owns that is of value. And assets can be ephemeral and really kind of airy-fairy. Some of them can be hard facts or very physical. If they're physical, you want a description of what it is and where it is. If it's ephemeral, then you want a description that provides you whatever those rights are. A non-disclosure agreement, that's an asset. That's a promise for somebody not to tell some of your secrets. That needs to go in the asset section. Any agreements relating to your shareholdings, your shareholders, this can go in the asset section as well, more because it doesn't fit anywhere else. Oh, it's going to be in your minute book for certain, but it's also nice to have this in your asset section because this is going to, the way that the company operates with its shareholders or the shareholders operate between themselves, you can consider that an asset. You want all your agreements in here that the company's ever entered into. You sign an agreement, put it in the directory. Lease agreements, really important. A photocopier, your ability to use that photocopier for another year and a half if you've leased your photocopier, that's an asset. You want to have that in there so that anybody investing in your business or buying your business knows that you've got a photocopier for at least a year and a half. Property leases, where you're operating, you want to have those in there because again, your operations could be considered or should properly be considered an asset. Any licenses, that's in there. There's lots of things that go into the asset section. It's going to be very specific to your business, but to raise the big attention here, the one that everybody forgets about are the whole website and social media. Your presence on the internet is an asset of your company, and making sure that you've got located somewhere the access for all of those social media accounts, the domain name registration to be able to access that, or even your hosting service, that needs to be in your assets directory in the data room. Social media can oftentimes start with asking an employee, hey, you know that Twitter, don't you? Can you start an account for us? But as that business gets bigger, as the brand builds, you need to take full control of those back and make sure that you've got those assets documented and locked down somewhere. Financial matters is the easiest thing because your financials are things that you do on a regular basis because you're going to be filing taxes. So this is the easiest thing to collect after the fact. But while you're at it, it sure is, why not just put them into the right directories when you're making them? Your financial statements, your annual financials, monthly trial balances. Many of us are now using software, Simply Accounting or QuickBooks. They will generate monthly trial balances. Print them out, save them as a PDF, put them in a directory so that it makes it easier later on down the line when an investor comes in. You're not printing massive amounts or spending the time of collecting this information after the fact. Bank statements, really handy just to dump the bank statements in there for your company, assuming you have a company bank account. Same with your credit card statements, just scan them and put them in there at the time. Somebody investing in your business or buying your business is going to want to see what the corporate credit card looks like and what it's looked like in the past. Of course, it goes without saying your tax filings and GST and payroll remittances, very handy to put in there as well. So what we've done is I've kind of rambled through to try to explain why it's important to do it. I've done a pretty poor job of telling you how to do it because your business is going to be unique. I can't tell you, I don't know what your business is, but if I could explain anything is to give you some ideas of the things that should go in there, the general overall categories that they should go in there, being your minute book if you're incorporated, your business operations, your assets, your financial matters, other agreements kind of get plugged in there as well. If your business is doing something, there should be a copy of the paperwork that demonstrates what you're doing and put it into a directory. A lot of business gets done by email. A lot of agreements just get done by email. Never underestimate the beauty of going up and saying print to PDF and printing that email and putting it into a directory where it should go with a brief explanation of why you printed it in there. A supply agreement can be something as simple as an email between you and a supplier saying, I'd like to buy 1,000 of these to be delivered next month. Don't feel that agreements need to start with a legalese and end with a thumbprint, blood, a wax seal, and a signature. Uh, if it feels like you've just made an agreement, if it feels like you've just done something that has advanced your business in some way, even if it's just an email, print it and dump it into a directory. And with that, I will open myself up for any questions people might have. Let's
Perfect. Thank you, Craig. Yeah, Cecile texted me to tell me that her internet crashed, so she has asked me to officially kind of take over. So if anybody does have any questions for Craig, please go ahead and put it in the chat, or go ahead and raise your hand, and we can call on you one on one. Craig, maybe I'll start things off if that's okay. I'm just kind of curious. Are we okay now in this modern day and age to go entirely digital with a minute book or with our records, or are there circumstances where you recommend we have a paper copy?
You can go entirely digital as long as you've got a printer. So I've seen that for example, the online incorporation entities, they will maintain entirely digital copies. They won't even print a share certificate. They will have as part of the resolutions that you agree to when you create the company online, the agreement that you don't have to have a share certificate. And a share certificate in the end is really just a piece of paper that says this company recognizes that this person has 100 shares. The critical thing is to be able to print and present upon demand these materials. Who's going to show up at your door and ask for these materials? Well, somebody who wants to sue the company, somebody who wants to know who the company directors are, somebody who just wants to know who they're doing business with. It can happen when you're entering into credit facilities or when you're entering into a supply agreement that people, or where you're supplying to someone else, they might want to know who they're getting into business with and that they are legitimate. And so if somebody shows up at your records office asking for a copy of your shareholder register, it's okay to have it all online as long as you can actually hit print and provide a copy to them. Good question.
Perfect. And I don't see any hands or questions yet, so that gives me free ability to continue to ask questions, which is not something I usually have any issues with. If somebody is ready to get investor ready, Craig, is a lawyer, or I guess at what stage do you think that people should get their lawyer involved in the process of bringing on an investor? Before, after, during?
I want to say, even though it's in my self-interest, before you ever show your investor anything about your business, go to a professional advisor. Okay, does it have to be a lawyer? No, it doesn't have to be a lawyer. Could be an accountant, could be a management consultant, could be somebody that's a good business advisor with a lot of experience. The goal here is that you never have a second chance to make a first impression. So if you have an investor in a worst case scenario who says, I want to invest, and you say, absolutely, here's my business, and you bring out a collection of shoe boxes with a ratty invoices all in it, you can never undo that. As opposed to saying, well, that's great, let's talk about this in a week. Go to a professional advisor, say, this guy wants to invest, here's what my business records look like. Gives you an opportunity to dot the I and cross the T's, to take away some of the easy reasons to say no for the investor. A lawyer is going to help you with that for certain, but also an accountant or many other professionals would be able to help you with that same thing too. So bringing them on before you really get and start sharing with the investor is critical. Second reason is that a lawyer and a professional advisor will help you get the right documentation in place. Just because somebody says they want to invest in your business doesn't mean that you should open up everything in your business to them without having proper protections. For example, a non-disclosure agreement, which at its best is a piece of paper that says that they promise not to do something. The best way to keep a secret is to never tell the secret. But the second best way to keep a secret is to have a legally binding agreement that they promise not to tell the secret. So the short answer to that is talk to a professional advisor before you start going down that process for certain.
Awesome. Sounds good. I just want to say, just from personal experience, I've encountered, or attempted to advise folks who are trying to do this after the fact, trying to create a minute book, and basic feedback was that they had to go to a lawyer and get the lawyers to reconstruct it from scrap. And it costs many thousands of dollars to do that properly. And so if you ever intend to actually sell your business, it's best to do it correctly right from day one. You'll save yourself a lot of pain and heartache down the road. Is that common, Craig? Do you see that a lot, where you're reconstructing a minute book so that you can help sell businesses for folks?
Did 2 this week. Absolutely. And it can actually, you can actually make it worse on yourself. So when you're incorporating, you can choose between what law you want to incorporate under. You can incorporate under the law of Alberta, or you can incorporate under the law of Canada. If you incorporate under the law of Canada, then it comes with some subtle but oh so important differences. And that comes down to financial statements. So if you incorporate under Alberta, you have to prepare financial statements. You have to get them audited by law, unless all shareholders agree not to audit the financial statements and not to prepare the financial statements. Under Canadian law, you have to get audited financial statements every year, unless the shareholders agree not to get audited financial statements. Now notice I didn't say not to get financial statements. So when you're recreating these minute books, and there was a real period of time there where a lot of people were incorporating under the Canadian law instead of the Albertan law, for the reason that you had to go down to a registry office under Alberta law, but under Canadian law, you could go online. The federal government had an online facility that allowed you to incorporate. And so because of that, I'd have a lot of people coming into my office that incorporated under Canadian law, and they'd say, look, I really need you to build my minute book. And then we actually had to prepare financial statements for the company that had been operating for 10 years. Now, for 7 of those years, it was really not doing much. There was only activity in the preceding 3 years, which of course, it was good activity. That's why they ended up in my office. But it also meant that they were bending over backwards to not just recreate a minute book, they then had to recreate financial statements, adding further costs. And there was nothing we could do. We couldn't get them to agree not to have financial statements because it was under Canadian law. You had to do the financials. So it can be even worse than just recreating the minute book. And it could have been easily addressed every year. Your financial statements aren't hard. At the end of the year, if you're using a Simply Accounting, it's pushing a button. If you're not using Simply Accounting, then at the end of the year that you've done nothing, just keep track of how much you've spent and how much you've received. And if it's 0 and 0, good, move along. That's so much easier than going down to the bank and paying the bank to produce bank statements for a bank account from 10 years ago to be able to show that no money was going in and no money was coming out.
Incredible. Awesome. Well, I want to thank Craig Sherburne for another fantastic presentation. Craig delivers our corporation presentation, which we usually put near the beginning of the term as well. And your presentations are always extremely well received. And as a reminder to everybody, Craig is one of our many excellent experts. Craig's, of course, the one most in demand. But so if any of you have any legal questions that you want to talk with an expert on, Craig is probably the guy we're going to send you to. And so, yeah, if you're interested in that, just reach out to Cecile or myself, and we will happily make the introduction. But I will give everybody else their 10 minutes of lunch back. And I'd like to thank everybody for attending. And thank you again, Craig. And everybody have yourself a wonderful day and a great weekend.
My pleasure. Thanks all for attending.
Bye now.
Bye-bye.